Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Jeff Rosenfeld. Thanks for being on the show, Jeff.
Hey, Whitney, pleasure. Thank you for your time today. I'm interested in sharing my thoughts with you today.
I'm interested in having you on the show, Jeff. You have a unique business that I think can help so many people in this industry that most of us probably don't even know about or know exist that could really streamline some of the headaches that we have in our typical value add business model. But a little about Jeff. He's been working in the construction industry for over 10 years and is a contributing writer for the Forbes Real Estate Council. He is also a licensed general contractor and a city council member of the city of Boca Raton. He has been a speaker at many panels during the Marcus and Milchap events also. Jeff, welcome to the show. And, I just appreciate your line of work, obviously, and us doing lots of value add multifamily deals, in large projects of renovation, and whether it's 100 to 250 units at a time, it's a big project to manage, right, and ensure that you have the right people there. All these things, it's a lot to ensure. It's so important. It's such a big part of the business, right? That we're getting that value add plan completed properly, and that we even have the proper projections and those things. But tell us a little about yourself and about your business, and let's jump into some specific things that you're very skilled with that can help our listeners.
Yeah, absolutely. So I've been, in addition to an investor, I've been a licensed real estate broker. Prior to working for Adivo Construction, I had a similar position with a property preservation company. If you recall back in 2006, where there was the big downturn and all the foreclosures, companies like Invitation Homes and American Home for Rent were aggregating single family homes, and I had the responsibility for overseeing all those assets until either the bank took them back and or they were sold to an end investor. Relative to what we're doing now, I'm EVP with a company called Adivo Construction. As you indicated, we're a national self-performing provider of construction services to the multifamily industry. So not only does our company self-perform, but we self-manage. The benefit of that is it allows the asset owner to procure assets in perhaps markets that are not customarily accustomed to. And the reason I say that, there's a slight inventory constraint right now due to a number of factors. COVID has slowed transactions down, and the number of viable value-added properties are still out there, and they're still plentiful, but you have to be a lot more selective in which market you select to make sure that it has good economic drivers, good growth from a population standpoint, and good growth from the perspective of companies moving in the area to support occupancy. So what we do is, because it's such a complicated process for a portfolio holder or an asset owner, not only to take down an asset, but to negotiate the terms of the money with banks, we want to alleviate the asset owner of the construction headaches. And there's a differentiation between us and what's called a construction management company. A construction management company will come in and take the contract or the scope of work that the asset owner has and try to identify qualified subcontractors that can fulfill that. The problem with that is that you're dealing with a multitude of companies, all of which have their own overhead that detracts from that pool of money that your company has aggregated to improve the property. So we took on the posturing a number of years ago that we were going to be a self-performing company. So what do I mean by that? Not only do our crews take occupancy at the job site until the project is completed, but they come to the job site under complete supervision. The benefits to the asset owner are probably threefold. It mitigates the need for their on-site property management company, be it their own property management company or a third-party management company, from getting involved in the construction process. We deal directly with the asset owner, so it eliminates any additional fees that the property management company may charge. And by us being on property, we're much more effective in moving along according to the expectations and cadence that the asset owner has. So when you think about
I'm glad that you clarified that, because I was wondering, I was one of the questions I wanted to ask you, just, are you going in and then managing local, specialists, or local workers, and finding those people, but you're actually bringing in your own crew, your own people that are specialists in the remodel and just the entire process of the value add.
That's correct. Yes. And we don't cross discipline. So for argument's sake, the gentleman that's been working us for the last 10 years that does interior paint units, that's all he does. We're a comprehensive shop, so we can do anything from interior unit turns to common area improvements to rebranding to roof replacements, windows, any kind of outdoor amenities. But each one of our workers, all whom of which are W-2 to our company, have a particular skill set in that area. So it's never a situation where we're cross-pollinating trades. The net effect to the asset owner is they get condo quality renovation work, not only on the interiors, but also on any type of rebranding. Why is it important to rebrand the outside? I could do a phenomenal job in renovating your unit. If you don't make that known to the local demographics and local population by either rebranding the exterior of your building or repainting it, you're not going to get the necessary traffic to get the absorption. So, it's a process. You have to renovate the units. You have to get the excitement out there about the units being renovated so you can get the necessary rent bump you're looking for, which will give you the overall return on investment that everybody invested in the asset for on the onset.
Nice. Well, I just appreciate you elaborating on part of that a little bit as far as some of the benefits really of having, hiring someone like yourself to handle that, just that delicate process. But I thought we'd back up just a little bit. I thought you could speak well to just the different types of value add improvements. And I mean, we hear from, and light value adds, and there's a whole, assortment of opinions about what a value add is, or whether it's light or heavy. But just, you are so involved in this and an expert. I'd love to hear your thoughts on that. But even to, whether it's a property that we have to go, that we just turn over, say, as units come available, we're remodeling those units, versus a property where we have to vacate 50 to 100%, of the tenants, to get that property stabilized. What are your thoughts about just different types of value adds and your all's take in stabilizing properties like that?
Sure. Excellent question. Of course, there's a light value add, and I don't want to bore your audience. I'm sure everybody's sophisticated that's listening to the podcast, but multifamily assets are categorized by A, B, C, and D. A being right out of the ground. C and D properties are more distressed. And F asset is an actual down asset that is non-operational and has no certificate of occupancy. So when you talk about doing remodeling on unit turns, that's most likely a smaller size project where they would do it on lease term back. Maybe it's 3 or 4 units a month. I would consider that more like a hard turn. You're not really doing a renovation. What you're really doing is just prepping the apartment for a new tenant to move in. Candidly, it really depends on the expectation of the asset owner. If they're looking to get more rent out of that unit, they're really going to have to invest money to improve the finishes in order to bump the rent up. If they're going to do what's a quick paint job and put a tenant back in, they'll get a little bit of natural appreciation, but they're not going to get that real rent bump associated with a true renovation. Now, on more distressed assets like you discussed, which we customarily work on, we'll go in and either work on a whole floor or a whole building at a time. And the rationale behind the asset owner is not to use an expression, but they want to rip the Band-Aid off. They recognize that the velocity by which we move to the asset allows them to recognize the bump up in basis and the NOI a lot quicker, which contributes to the overall return on the asset. So if they have the ability to either change the tenant population or reposition those tenants outside of a lease renewal, we have the ability to go in and quickly renovate those units within one rent cycle. And the reason I say one rent cycle, a lot of companies are going to come in and take 20 units offline and then forget to come back to and complete those units. What's the problem for the asset owner? Every month that asset sits unleased or unoccupied is lost to lease. So anything we take offline, be it 15 units or 50 units, occupied or unoccupied, are renovated, construction clean, final clean, and put back into that asset owner's inventory for immediate absorption. And that mitigates the loss to leads and allows us to move to the asset more quickly.
What is that timeline typically, for units like that? If someone has a 200 unit property that they're completing this value add project, maybe you can highlight just how some of that's scheduled and maybe just how long it takes to turn over a unit or how many units you're doing at one time.
Sure. Great question. And it all depends on the nature of the scope of work. If it involves a comprehensive renovation, which includes flooring, new appliances, new countertops, new interior pocket doors, obviously there would be a little bit more time involved with that. But oftentimes we also do in-place renovations where we'll do a quick countertop, resurface the cabinet fronts, maybe do a new vanity in the bathroom. Oftentimes that could be accomplished within a couple of days. But that question is based on the heaviness of the scope. But
of
with
course,
that being said, we staff up according to the project complexity. So if it's a more complex project, we have the flexibility to move more workers on the project to accomplish the goals of the asset owner. So customarily, everything happens within a 30-day period.
So why don't you speak to a little bit about, because I know, a lot of people listening they're either passive investors who are investing, in deals, potentially, with operators that are doing this value add plan, or they're operators that are, attempting to do this as well, or have been doing it for a long time. But, maintaining that occupancy and while doing renovations and just to obviously to accelerate that rent growth, it's difficult, right? And it's a difficult process. Can you just speak to where you see people making mistakes when, trying to do that well?
Yeah, it's a balancing act, and you got to really, and I always say this to any asset owner, you got to think before you buy an asset, before you do your due diligence, before you walk the asset, before you put your best and final in, understand what your objectives with the asset, what's your exit plans, what's your expectations with your renovation, who is your strategic partner that's going to help you maximize the value of the asset. Because it's nice to pick up an asset at a negative discount to current market, but if you don't have a good strategic partner that has the same objectives as you have relative to the final finishes on the product and what your expectations are for rent growth and overall returns, you're going to put yourself in a compromised position. So I always say, make sure you have all of the people that you want to work through the project lined up. And make sure you understand not only your strategy to buy the asset, finance it, capitalize it, and stabilize it, but what's your exit strategy? Are you going to hold the asset for 3 to 5 years? Do 50% of the units get proof of concept and retrade it for appreciation? Or is your goal more so to renovate all the units, cash flow it, capture the bump up in basis, and also the natural appreciation over time? Some of our asset owners renovate the entire property in its entirety, including interiors and exteriors, because they hold the asset in perpetuity. So a lot of the questions you asked me are all contingent upon what the strategy of the portfolio holder or the asset owner is.
No, it makes complete sense. It's just a lot of things there. I'm glad you just kind of went through that list because it's things you better be thinking about, right, before you close on a property, no doubt about it. What about just, the level of communication, say, between, your team and the property management team versus the owner? Obviously, the, property management's going to be firsthand and, what units are available and when they're coming available and things like that. But how does that communication work?
Yeah, we're extremely client-centric. We don't take an equity position in any asset. It's particularly important to us that we help the asset owner achieve not only their financial goals, but their fit and finish goals. So, we like to communicate as much as the client wants. Oftentimes we over-communicate. We send weekly updates of progress photos. We're in constant communication with on-site management, be it their own asset owner's management or a third party. And whatever information and in whatever format they need, we provide them any level of reporting necessary. It's always
one thing.
Listen, we're a relationship-based company. If I don't do a good job for you as an asset owner on the first job, they would be hard-pressed to call me back, and it would be hard for me to pick up the phone. So we act as if the asset's our own when we take it on. We ourselves built multifamily assets down here in Florida a number of years ago. We understand the other side of the table. We put ourselves in the asset owner's foot relative to what they want to see as the final outcome for the project. And I think by doing
one thing I wanted to highlight that you mentioned too was even renovating units, while tenants are still in them, right? Could you speak to that process a little bit? I think that's something that a lot of people don't think of, is that there's sometimes upgrades you can get done even while people are living in the unit. How do you organize something like that? And obviously with the tenant that's living there to make something like that happen.
Sure. I mean, there's a limited amount what you can do in an occupied unit. Oftentimes there's chemicals that are involved that you can't utilize. So when we're doing an in-unit renovation, oftentimes the asset owner will move that tenant for a day or two into another unit that may be a model unit, and then we complete the renovation and they move back in. Or if it's a scenario where they leave at 7:00 in the morning to go back to go to work and return to 5:00, we'll collect all of the furniture in a centralized room, cover it up, do whatever work we need, and then put it back in a situation where all the the toilets are operational, the kitchen is operational, and so on and so forth, so the resident can live in the unit during the renovation process. Customary renovations of those type are a little bit lighter in nature, so we can get them completed within a 2 to 3 day period. But optimally, and what's in the best interest of the asset owner, if it's not a restrictive covenant on the part of the bank or it doesn't destabilize their asset, is for us to work in unoccupied units, because our velocity is much better and they can have more renovated units, which allows them to recognize their rent bump.
So what about, with you being connected to so many operators all over the country, seeing the inside of so many deals, just what's your thoughts on the current, inventory for value add, across the nation? You can speak to different markets that you're familiar with.
Yeah, well, there's certain markets right now, and I'm sure everybody's aware of this, there's been a demographic shift where people are moving away from highly populated urban areas into more sprawling areas. Everybody sees the demographic shift out of the tri-state areas. The beneficiary of that has been Florida, Texas, Phoenix, the Carolinas. These are the markets where asset owners are seeing the greatest opportunity, the greatest inflow of potential renters. And if you look at some of the dynamics that are happening in California, some of the largest companies, including Tesla and larger companies, Taiwan Semiconductor, are building billion-dollar plants in Austin, Texas. And hedge fund managers are moving from California and New York down to Florida because of the more favorable tax environment. So with that being said, those are the areas where the astute asset owners are really concentrating where they want to pick up assets. Now, to more directly answer your question, there's always inventory available. There's always somebody that has generational assets that they want to get rid of. It may not be on market. It may require more research. It may be an off-market opportunity, but there's thousands and thousands and thousands of apartments throughout the United States, thousands and thousands and thousands of hotels that can be converted. So there's never a dearth. It just requires a more astute operator and better research relative to you making an offer on a particular property.
Of course, you mentioned the hotel industry there. Obviously, there's so many projects there. What's the likelihood of an operator being able to turn a hotel into a multifamily? And is that something you all been involved with?
Very likely. I know of one contact I have that has done 3 of them in Minnesota. It requires a little bit more permitting and a little bit more time horizon because you have to get a change of use certification. But because of the way suite hotels in particular are laid out, they're very conducive to convert over to multifamily without having to do any structural changes inside. So the phenomena is happening. The incubation period for that is longer than just taking down a multifamily asset and renovating it. But I believe that will be a trend not only this year, but going into calendar year 2022.
No, that's interesting. I like raising awareness, to the listeners of opportunities like that potentially they may not have thought of. I know it's not something we've considered much, but there could be some big potential there, over the next few months and year even. Jeff, what do you expect, say, over the next 6 to 12 months, just in the real estate market, to happen as far as a potential downturn or not?
No, I don't see it at all. Interest rates are pegged low. And, if you listen to our new Fed Chair Yellen, She's kind of following in suit, and it's going to have interest rates pegged for a very long time. They even said they would allow the economy to overheat somewhat before they raised interest rates. So what does that allow? That allows you to acquire contingency money at a lower price point. With the availability of liquidity and capital in the market, I don't see any type of downturn at all. And the only areas of the real estate market I think that are going to be significantly adversely effective are commercial real estate in downtown Manhattan and in industrial areas where you have 80-story towers that are now 20% occupied. And of course, retail, as everybody knows, as everybody shifts to a more online environment, the necessity for retail space is becoming somewhat mitigated. But multifamily is tremendously strong now. Single family homes down here in Florida, I don't know how it is in other part of the markets, but you got to get your offer in within an hour or the property's taken off market right now. So for the areas where people are interested in moving, the markets are white hot right now. That may not hold true in the Connecticut's of the world and in New York, where they're seeing a slight compression in apartment rents and in single family houses. But if you look outside of Manhattan and look into the boroughs, you can see expansive growth of single family purchases in the boroughs as well. So I feel very confident about the multifamily industry, not only this year, but in addition, moving forward. And if you look at general demographics, people are more disposed to being renters than being homeowners. This holds true for baby boomers and for new home buyers as well. It's just a change in mindset where people don't want to be caretakers for their property. They rather pay for a property that's maintained by somebody else.
I would say after COVID too, there's so many more people are open to renting than probably ever before because they're moving and to new areas and or so many are anyway. Jeff, yeah, such great content there. We could talk about so many of those things for hours. I want to ask a few more questions just about your personal success though. Any daily habits that you have that have helped you achieve success?
Sure. I mean, there's no magic bullet there. You got to, everybody said, I wish I had better luck. You make your luck. Luck is a function of you working hard, getting up in the morning, making sure you're prepared, doing necessary research, having good relationship with your client, and being a company that's forthright and producing the product that you represent to your client on the phone. We tell on ourselves anytime we go out into the market and do a job that's sub-quality. That's never happened. Our clients come back to us time and time again because they know when they pick up the phone, they have somebody that they could turn their head away. They don't have to visit the asset every week, and they're going to get the outcome they're looking for. So it's all about preparation, doing the appropriate research, and making the necessary effort to making sure that your clients get the product they're looking for.
I don't think I've had that answer before, and that's one of my favorites for sure. It's like pretty much there's no such thing as like, you make your luck when you get up in the morning. So I love that answer. And I hope the listener really thinks about that because I couldn't agree more. And maybe you just highlighted on some of this, but I want to ask anyway, number one thing that's contributed to your success.
I just think it's, I think it comes back to just hard work and understanding your industry. I'm a student of my own industry. I've been doing this for real estate and investment for more years than I'd like to say, probably in excess of 20. But every day I learn something. I continue to read books about real estate. I continue to listen to people that have better insights than I do. I attend conferences. I listen to industry leaders. I look at new trends in the marketplace. And that's the way you can best help your clients, is to be well informed about what's happening now so you can better project what the future is going to look like for them.
Jeff, how do you like to give back?
We give back in a lot of ways. Our company, as we're fortunate, we're very busy right now, and we like to give back in a number of fashions. I give back personally by being on a number of boards, homeowner boards, as well as being on the city council. The company participates every year in Habitat for Humanity, where we go out and remodel a home for somebody that's less fortunate. And we feel that's a good way not only to show our expertise in construction, but to give back to the community as well.
Nice. Well, Jeff, it's been great to meet you. And I think you've helped open the eyes to a lot of our listeners to the option of having someone like yourself really come in and manage the entire renovation process with just a very professional team that's very experienced, can get that done very quickly just to accelerate that rent growth faster, right? And more professionally, all those things. It's such a big part of our business, in the syndication business, especially that value add component. And just, many things that, even opening our mind to hotel conversions and another operator that is doing that. And just the pros and cons of that potential relationship with someone like yourself or just general contractors in general. But unfortunately, we're out of time today. Maybe we'll have you back, and there's so many other things that we could discuss. And so, tell the listeners though how they can get in touch with you and learn more about you.
Sure. The name of the company is Adivo Construction. There's a multitude of ways you get a hold of us. Our website address is www.adivoconstruction.com. Our toll-free number is 833-825-2425, or you can contact me directly at the office and, just ring us up and we'll be happy to talk through the process. A lot of times asset owners, and I want to make this as a final comment, asset owners come and say, hey, this is our budget. Help us select the upgrades and finishes that are going to yield the greatest return, quickest absorption, and greatest contribution to the value of the asset. Those are the clients we love because we feel like not only are we helping them with the construction, but we're being consultative and helping them not only maximize the value of their investment, but also in help their investor population as well that has participated in the asset with them.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.